So there's no solution in sight for the debt ceiling debate, and lasting stability in the US looks even further off. Where does that leave investors? Well, joining me now to answer that very question is Peter Dixon. He's a global equities economist at Commerzbank and is live from the company's London headquarters. Peter, thank you so much for joining us. Now, we have seen a little bit of pressure on a lot of the equity markets. Does it mean that you would just hold off and possibly favor something like safe havens, gold, or the Swiss franc? Or actually, does it mean that it's a buying opportunity out there for the braver investors?
Well, I think you'd have to be very brave to want to plunge into the market at this stage. There's a huge amount of uncertainty. As we just heard, the likelihood is that we will see a very last-minute deal to ensure that something goes through. But given that most investors have been under pressure this year in terms of generating returns, would you really want to take that risk? So I think that we're seeing it in terms of gold, we're seeing it in terms of the Swiss franc. Investors are looking for safe havens and staying on the sidelines until there is more clarity.
Peter, what happens if on August the 3rd we actually wake up and there has been no deal in the US? Are we going to see a massive sell-off, and are we talking, double-digit losses within the hour that the market's open?
Probably not, because I think the US has enough cash to grant it at least another week's worth of leeway. So the world isn't going to come to an end on August the 2nd, August the 3rd. But there's no doubt that things like market measures of risk are going to spike very sharply, and that will intensify the longer we don't get any resolution on this problem. And that's going to put pressure on markets. So we will start to see concerted selling pressure building up. And the longer the impasse lasts, the greater that selling pressure is going to be.
So, Peter, how much attention are you actually paying to these earning results? Because we have companies that are, keeping a very good eye on margins. They're making profit. They're cutting costs. But actually, if the world is going to go into a double-dip recession, does it make any sense for equity investors to look at specific stocks?
Well, if the world's going to go into double-dip recession, then obviously that's a different ballgame. But certainly, if you look at, say, the United States, the US has got its cost base under control over the course of the past few years, and that's what's helping earnings to perform remarkably well. And certainly, if you look at what's priced in for the next couple of years, they've got fairly conservative numbers, 15% I think this year, and 10% in 2012 in terms of earnings growth. Those are eminently achievable on the assumption that the US economy stays afloat. But that's not going to prevent investors from looking at the bigger picture and saying, well, if there's a problem with regard to the debt ceiling, that could cause some selling pressure.
But where should investors actually put their money? I mean, banking stocks haven't been performing very well, and actually they've had some pretty disappointing earnings so far. Again, buying opportunity, or would you stay away from them? I
don't really like banks that much. I mean, I think there was too much uncertainty surrounding politics and the nature of the banking sector over the course of the next few years to want to be there. I think that safe havens, which are paying reasonably decent dividends, are the places to be, I think, in this fairly challenging environment.
And so give me a couple of sectors that you like at the moment and that would represent safe opportunities, but also with pretty decent returns.
Well, I think telecoms, utilities, those kind of areas are probably the places you're going to want to be. They're safe havens, they're fairly defensive, and they're going to continue paying dividends unless something untoward happens. And
again, this is what, just general sectors, or would you stay away from the ones that are exposed to peripheral Europe?
That's a fair point. I mean, I think the peripheral problems will continue to weigh upon the market for some time to come. But I think under the, on the assumption that we're at least past the worst for now, you probably have to worry about that less than you did this time last week.
All right, Peter Dixon, thank you so much for that. Peter Dixon there from Commerzbank with tips on where to keep your money safe.